Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 29th through August 2nd, where we'll talk about how to make money trading the July federal interest rate decision. We've got the FOMC decision this week. We'll see if they're going to cut rates or hint at when they might start cutting rates. So again, thank you for joining us for part one of our weekly trading game plan for July 29th through 8/2. Where we'll talk about how to make money trading the federal interest rate decision this week. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of July 29th through August 2nd. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, our trade strategies, trade ideas, etc. You can find a direct link to this Google document in the description box below. We keep all of our notes documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes from previous weekly trading game plans, and you can also find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome to Ricky Khan. Thank you for joining us in the chat today. Hope you had a great trading week. So firstly, we'll look at how the markets ended up on Friday. We'll look at a breakdown of the indices, technology components, etc. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So we can see Friday we had a rebound in all the indices. Dow surged up 1.6%, NASDAQ up 1.1%, S&P up 1.1%. So again, we'll see we had several days of decline followed by a Friday rebound. So we had 78% advancers, only 18% decliners. We had 85% new highs, only 14% new lows, almost 64% now above their 50-day moving average, only 36% below. We've got almost 70% above their 200-day, only 30% below. So again, Friday very bullish, quite a recovery from, again, several days of declines. See the Mag 7 recovered, so strong recovery in the Mag 7, strong recovery in technology, just a few reds, specific stocks, Lilly, etc., Abbott, Walmart, etc., and Google. So if we look at some of the news, crypto libertarians, fuel support for Trump, earnings derail stock rally, over doubts over AI. So again, we'll be talking about that relative to the Mag 7 earnings coming up. Post PCE stock rally, not time to buy the big tech dip. U.S. inflation data lifts global stocks. Dow closes 650 points higher, buoyed by bullish inflation reports. So again, we'll look at the PCE data, and that's articles claiming that that's what caused the pop-up in the Dow. So oil breakdown below 80, headed down towards 75. It's got support at 75. Going to be range bound between 75 and 80 right now. Natural gas broke down, headed down to 2, so support at 2. Gold broke down below 2,400, so we've now got 2,400 as a resistance level. We'll see 2,350 is a pretty strong support level, so we'll see some oscillation there. Saw quite a bit of volatility in gold and silver. Saw the yen had a several-day rally recovery. We'll see if it continues up. Looks like when we see the futures, looks like there's some consolidation. Doji, it's trying to decide which direction to go. We'll probably talk about some of the factors that are being proposed due to the strengthening of the yen. Saw yields decline on Friday. They had been popping up a little bit earlier in the week, but now the 30 is down to 4.45, 10-year down to 4.2, 5-year down to 4.8. We can see that inversion in the yield curve has unraveled quite a bit. So that's, again, a positive sign from a recession standpoint. If We look at a breakdown of the major indices, and again, you can find direct links to these screeners in the notes documents as well as in the screener sheets in our ETFs and Watchlist Google Sheets. So we look at each of the major indices. Again, we see the Dow had recently made a new all-time high, dipped down, didn't quite reach its moving average, got support around that 400 level. Looks like it's popping up to test that upper trend line, possibly retest its recent all-time high. We'll talk about opportunities to trade that. IWM, again, speculation on rate cuts. So it had a big run. It's been, testing this upper trend line, making new all-time or 52-week highs recently. And we'll talk about potential impact of the July Fed interest rate decision on IWM as well as the other indices. SPY went down to its lower trend line, converged at its moving average, got good support there, just kind of oscillating right around that moving average, that lower trend line. So again, good support. Q's, NASDAQ broke down below its near-term moving average, got support at that lower trend line, bounced off of that on Friday. So again, now that moving average will provide some level of resistance. So it'll be harder for the Qs to bounce. And again, we'll talk about that some more as well. If we look at a breakdown of the technology components, see ARK had a bounce, probably mostly driven by Tesla rebound after their somewhat disappointing earnings and decline, got a bounce. But again, just kind of oscillating within that channel. FANGs, again, we talked last week about the reign of the Magnificent Seven potentially being over. Saw a significant breakdown in the FANG stocks, which is part of the Magnificent Seven. Broke down below that channel, broke down below the moving average, got plenty of room to fall as that longer-term moving average. So again, indications are that possibly, even though we got a rebound in the Mag 7 on Friday, looks like the reign of the Mag 7, Magnificent 7 may be over. Got a bounce, a breakout in biotech, so it looks like people are rotating within technology out of the Mag 7 into biotech and some of the other technology sectors, also out of semiconductors. So again, similar to the Mag 7, the FANGs, we saw it broke down to semiconductors out of its channel down to its moving average, got support by that long-term moving average, bounced up, but again, plenty of downside in semiconductors as well. Again, that long-term moving average will probably continue to provide some level of support. So TQQQ, which is the leverage long on the Q, is going to behave similarly to the QQQ. So it's approaching its lower trend line below its moving average. So again, more potential downside and level of support at that lower trend line. Barter Technology, again, broke down. It's got a pivot point. Looks like it bounced off that pivot point. It's got more downside to the longer term moving average as well. So again, even though we had that bounce up in the NASDAQ and in the technology sector in general on Friday, it looks like that was a recovery, a correction from the previous downside we saw. And it looks like there's more downside in the technology sector to come. Again, the indices so heavily weighted to the Magnificent Seven, that Friday rebound in the Mag 7, in my humble opinion, probably caused the rebound in the indices. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. So let me grab a quick drink and we'll look at a breakdown of the groups, the sectors, the industries. See if we can see some sector rotation opportunities. Okay, if we look at a breakdown of the sectors on Friday, you can see everything was pretty much in the green. Strongest real estate, industrials, and basic materials. So again, even though technology seemed to be pretty strong, relatively real estate, industrials, basic materials recovered. Again, partially on the breakdown of the bond yields. For the week, again, utilities, healthcare, so pretty defensive, industrials, financials, so again, a very defensive bent towards the week. Technology, communication services, the weakest, so again, seeing rotation out of technology into some more defensive sectors. For the month, again, very defensive, recovery in real estate due to decreasing bond yields, decreasing mortgage rates. So again, very defensive, financials, industrials, utilities, basic materials, most negative, technology, communication services. So again, we're seeing that rotation out of technology, and it looks like they're going into more defensive sectors, also assuming a Fed interest rate cut. So sectors that and industries that would benefit from an interest rate cut, like the IWM as well, are seeing inflows. So if we look at the industries, welcome Fairchild. Thank you for joining us. Hope you're doing well. So we see utilities, REITs, so real estate, solar oscillates. Get a lot of green on Friday, a lot of real estate, some biotech, real estate, REITs, recovery in basic materials, steel, gold and silver slightly. Got a rebound from a pretty strong downtrend earlier. Just very, very few negative. Medical devices, trucking, so transports. So for the week, again, some manufacturing. Solar was pretty positive. Oil and gas, some positive. REITs, again, real estate recovering. Steel slightly positive. Other basic materials generally negative. Copper, etc. Coal, gold, silver. Also uranium. Uranium had a rebound on Friday, but for the week was pretty negative. We'll talk about potential opportunities in uranium tomorrow. Aluminum pretty negative. So again, basic materials. Real estate, REITs for the month positive. Gold pretty positive for the month, and we saw that recent decline. Materials, silver pretty positive. Again, uranium pretty negative. Aluminum. So next we'll talk about the economic data from last week, and then we'll look at the economic calendar for this week. I'll bring up the economic calendar in investing.com. Just a quick reminder, as the important economic data and news comes out, I try to capture it as quickly as possible, post it in the Surf the Markets channel in our Discord. Our Discord is free to join. We'd highly encourage you to join and participate in our Discord. And again, you can see the breaking important economic news and data posted in the Surf the Markets channel. So I try to capture a screenshot, the raw data, and post that along with any important news that comes out in the Surf the Markets channel in our Discord. So again, our Discord is a great source for real-time economic data, as well as discussions of how to make money trading with your fellow BeachBum traders. So just some highlights of the economic data from last week. On Thursday, we got jobless claims data, GDP data, and also some of the PCE data. So if we look at jobless claims, continuing claims lower than expectations, so people are finding new jobs. We look at new jobless claims was lighter than expectations. So again, and the average is pretty stable. So again, all indications are the job market is still healthy. So again, no reason for the Fed to rush into cuts due to weakening the job market. GDP was much better than expected, so 2.8 versus 2.0. Sales up higher, a little higher than previous. So again, no indication of recession. GDP, the economy's better than expected. So again, no reason for the Fed to cut anytime soon. PCE prices down from previous, so that's a positive. Again, inflation slowly coming down, but core PCE was a little bit higher than expectations. So again, inflation is still sticky, smoldering, but slowly coming down, and I'm sure we'll hear Powell discuss that in this news conference on, I believe it's Wednesday. Friday, we got the rest of PCE data. So we see core PCE price index slightly higher than expected, core PCE in line, PCE prices in line, personal spending in line, income a little less than expected, consumption less than less than previous. So again, showing inflation slowly coming down, but still pretty smoldering and stagnant. We also got Michigan consumer sentiment, 1 year inflation expectations still below 3, as expected at 2.9, but 5 year went up to 3%. I expect that to, looks like it's getting stuck right around 3%. So that's a little concerning for the Fed. They want to see the consumer expect inflation coming down. Expectations improved a little bit, sentiment improved a little bit, but current conditions were a little below expectations. So again, consumers expecting higher inflation, not feeling all that great right now, but maybe things will improve in the near future. So again, all indications are spending again in line, positive. So again, we're not seeing a weakening consumer, we're not seeing a weakening jobs market. Inflation is not coming down as fast as the Fed would like. So again, no reason to cut rates anytime soon, but we'll look at the probabilities when we get to our strategy section. Welcome, MD. Thank you for joining us. Hope you're doing well. So we'll look at the rest of the economic data from last week, and then we'll look at the calendar for this week. So we had some bill auctions pretty much in line. Existing home sales pretty negative. So again, we had seen bond yields bounce up a little bit, so that impacts existing home sales. Crude stocks down more than expected, and yet we saw a decrease in oil prices, possibly a political move. Mortgage rates down 6.82, so applications still negative. I think a lot of people are just waiting for rate cuts in terms of home buying. And just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. See composite PMI, manufacturing pretty much in line. New home sales up, but less than expected. Again, I think people are just waiting. We still have some Fed speakers talking, so you'll hear their opinions on when they should cut, how much they should cut, etc. Talked about jobless claims, durable good orders down quite a bit. Talked about PCE, natural gas storage up and up more than expected, and we saw that decline in natural gas prices. Bond auctions, not too bad. Talked about PCE and Michigan sentiment, Baker Hughes, so rig count went up. So, and total rig count went up slightly. So again, maybe trying to capture more of that oil price before it continues to decline potentially. So let's look at the economic calendar for next week. So got some bond auctions, home prices. We got jolts on Tuesday, so we'll see, is the job market continuing to come more in line? Supply and demand. Again, this is something that Powell has pointed out in the past. If that comes more in line, that's a positive for the Fed. Mortgage rates, mortgage data, ADP non-farm change on Wednesday. Then we get the Fed interest rate decision at 2 p.m. Get their interest rate decision. You can see it's expected to be no change, so no cuts, no hikes, etc. Then at 2:30 we get Powell's press conference. Again, I don't expect, and we'll look at the probabilities of a cut for July, and we'll talk about in more detail how to trade and how to make money trading this interest rate decision. But you can see here the decision not expected to be any change. Any change in the wording in the statement will be important for volatility, as well as, again, what Powell's comments specifically are. My humble opinion, again, not financial advice, I expect them to say they need more data, need more confidence that inflation's coming down. Job market says there's no reason to cut anytime soon. We'll see if he gives any indication of when they might start cutting and how rapidly. But again, I expect the same kind of message. Inflation's still higher than their 2% target, so they need more evidence that inflation's going to come down to 2%. And again, the economy is relatively strong. Job market's relatively strong. Consumers okay. So no urgency for cuts. But again, we'll look at the probabilities and discuss it further in a minute. We'll get job cuts on Thursday, initial jobless claims, etc. So we'll see if there's any significant change there. ISM manufacturing. And we get jobs data on Friday as well. So plenty of volatility. Again, all the non-farm payroll jobs data coming out on Friday. Again, see if it gives any forward indication of when the Fed might cut. So again, we might see a change if there's any significant change in the employment data on Friday. So again, plenty of economic data to cause volatility in the markets this week. We saw quite a bit of volatility the past week for, I guess, first 2% S&P change in quite some time, like a year or so. Also, we're in the middle of the earnings season, so you can see the whole earnings calendar for the week in investing.com. I'd highly recommend you review the earnings schedule. Not only, again, is earnings very important, do they meet or beat expectations on earnings, but what is their guidance? We saw a number of companies, even though they beat earnings significantly, what they say in their conference call, what they say in their guidance is important. We saw Google got hit. They had good earnings, but they were projecting higher than expected costs, particularly due to AI build out. And again, my humble opinion, I think we're going to see more of that coming out of the Mag 7s and potentially some other software companies trying to participate in the AI trend. So again, I think that expenditure and whether they're seeing any actual profit from their AI expenditures will be important. So again, highly recommend you go through, see what impact any of these companies reporting earnings might have, or in the same sector. Again, you can hear how we trade around earnings in our video on how to make money trading when earnings matter. And again, earnings definitely matter. Also, guidance going forward. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. Also, in the earnings section in our notes, I put the link to the article we discussed last week about the Magnificent Seven so that we could see the earnings schedule for the Magnificent Seven. So if you go to that link in the notes, You can scroll down and find the dates for the earnings in this earnings season for the Mag 7. So we heard Tesla, again, earnings somewhat disappointing, and they declined, did have a rebound. We've got Meta, Facebook coming up on the 31st, Microsoft on the 30th. Again, we talked about Google their earnings were good. Their digital advertising was down a little bit, unlike YouTube, so that was a little bit of a negative. And also, again, their AI expenditures. Also got Amazon on the 1st, Apple on the 1st, and NVIDIA the final. Mag 7 not till the 27th. So again, a lot of focus on your cloud companies. Again, they've been spending a lot on NVIDIA chips, trying to build out their AI, cloud infrastructure, data centers, etc. Again, in my humble opinion, I think you're going to hear, they're spending a lot of money. They may not be making as much. Microsoft Copilot, how they're doing, how they're making money using Copilot AI, that will be scrutinized. And again, if the profit coming out of their AI expenditures is not what shareholders want to hear, I expect the whole AI FOMO trade to unravel. So again, be aware, listen to what they're saying. Are they making money on AI? Are they spending more than expected on AI? And what impact that'll have on your stocks or stocks that you're interested in. So again, I hope that all helps. And again, you can find this link in our notes as well. So let me grab a drink and we'll look at the market screen in Webull. Okay, just a quick reminder, if you're not already using Webull, they offer a number of offers and promotions. If you open and fund an account in Webull, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you open an account, fund an account with 25K or more, you can get 75 free fractional shares of stock. Under 7 or 25K, you can get 20 free fractional shares of stock. Also, they're offering a 2% cash bonus if you transfer investments to Webull. And if you transfer or fund your IRA, they're offering at least a 3.5% match in Webull. So again, if you're not already using Webull, we would highly recommend you take a look at it. And if you'd use our affiliate link in the description box below, you can help support our BeachBum trading community. We greatly appreciate that as well. I'm using the market screen on the online browser version of Webull. So we like to look at the histogram of advancers and decliners. So you can see, even though we had many more advancers than decliners, on Friday, the percentage of advancement was very small, so we only had a few with a very large advancement, very small tail of decliners. Again, most of the decliners are pretty small. I thought the net inflow was quite interesting. The past couple weeks, we'd seen a net inflow on Friday into the NASDAQ, and even though the NASDAQ recovered like 1% on Friday, we saw an increasing net outflow out of the NASDAQ. So again, even though the index went up, we see probably profit-taking rotation out of technology into other sectors. Conversely, we see a net inflow, pretty steady inflow in the NYSE, a little bit of a drop, a little bit of a reversal right at the end of the day. But again, different from the past 2 weeks that we saw inflows into the NASDAQ. Again, just a reminder, you can see the earnings calendar as well as the dividends calendar in the calendar section in the market screen in Webull. So a good way to keep track of upcoming pending earnings in the very near future. We look at the best performing industries for the week. See some defensive, so household goods, probably, mostly defensive, aerospace, some education, solar, renewable energy. So again, bounce back in solar, biotech, again, rotation into biotech, healthcare, home building, positive, real estate, some insurance, financials, again, defensives, consumer goods, defensives, beverages, and utilities quite strong. Quickly look at the ETFs. Again, mid caps, the Russell, small caps. So again, a rotation into out of large cap, big tech into mid cap, small caps. Also, benefiting from speculation on a rate cut. Up on the Dow, mid caps. Up on the S&P in general. Up on the NASDAQ. Again, Friday, pretty much everything was up. Short on the VIX, so we'll see the VIX had spiked up to about 18, dropped down to mid-16s pretty quickly. Again, small caps, Russell. Industries pretty much all green, some negative in healthcare and industrials, a couple negatives in energy, pretty much again all green from Friday. Commodities, nothing strong, I see. Bonds, zero coupon, government bonds. Okay, so let's also look at the futures. Welcome, Logan Flips. Thank you for joining us. Hope you're doing well. So if we look at the futures in FinViz, so again, we saw early week decline in all of the indices, and then a pretty strong rebound on Friday. See the Dow's got pretty good support around that 40,000 mark. See the S&P, it looks like it mostly filled that gap back from previously, bottomed and bounced, so possibly some more downside, fill that gap more fully to 5,400. Again, NASDAQ, pretty good support around 19,000. Looks like it approached that, bounced off there, so that's a pretty good support level. So again, might see some oscillation if it breaks down below that. Got some more downside in the NASDAQ. Again, Russell has small caps had a strong run. It's been making new 52-week highs. We'll see. It'll probably retest that. Again, the marker will be when we get the interest rate decision, what Powell says. Again, we could talk about the impact of that again in our strategies. Saw a decline in the Nikkei. Saw Easy Mike was talking about a potential long trade. We'll see, or a pairs trade. We'll see the yen in a minute. So he's talking about a pairs trade, long yen, short the Nikkei, and we've talked recently about some ETFs you can use to short the Nikkei. Euro stocks got a bounce after a decline. DAX same. Again, we saw the VIX peaked up. I think it actually broke into the 19s at some point. Could be wrong. But it quickly retraced back down. Now down to the future showing at 1610. So again, we've got plenty of opportunities for more volatility. And again, the trend right now is up. But again, any pop is quick quickly retracing. So again, we've got some ETFs. You can see short the VIX is SVXY. If you're nimble to catch that quick rejections. Oil, again, we saw break down below 80. It's got pretty good support at 75. If it breaks down below 75, could head down to 70. Again, natural gas had popped up, decreased back down. Now it's got, 2 or so support. And we saw gold break down below 2,400, get pretty good support at 2,350. You can see, as we've discussed before, when we get these large moves in gold, we tend to get a reflexive reversal. So we got that bounce on Friday after that big decline. Similarly with silver, but not so much of a reversal here. So it dipped down to about 28. Came back up just above 28. Looks like a doji, so looks like it's trying to decide if it's going to break down below 28 or correct back up. Copper's been trending down. Looks like it might have found a bottom and bounced. Palladium had bounced up and then declined back down. So if any, several of these are good opportunities for futures traders. We'll look at some of the ETFs, but the risk reward and some of the liquidity in some of these ETFs isn't so great. So there's a PALL ETF on Palladium, but I've never had any good luck trading that ETF due to its liquidity gaps, bid-ask gaps. So maybe if you're interested in that, you can look at PALL. But possibly trading the futures probably would be better for several of these. Similarly with corn, talked about recently. Wheat made a new 52-week low late on Friday. We went long on wheat on Friday using the WEAT ETF, and we'll talk about that trade more so tomorrow. But again, we'll talk about the grains report. The grains report seemed to be pretty positive on corn and wheat. So I'm not sure the decline in wheat. So that looks like we like that opportunity. Looked at cane with sugar. Cane's an ETF to trade sugar. And then again, we saw the bonds. Bond yields had been going up and bounced. Bond yields came back down, prices back up. I expect we see that's pretty much a double top. And see if it retests those tops on the bond prices. See the dollars now kind of hugging that 104 DXY. We saw that run in the yen, popped up, got rejected. Looks like it's consolidating. Again, looks like a doji now. So looks like some indecision. Which way is the yen going to go? Is it going to continue to trend up? Or is it going to break down and correct before it trends back up? So again, just on the yen, some comments that I've heard is we hear the Fed is expected to eventually cut. We hear the BOJ, Bank of Japan, also has a Fed interest rate decision. I believe it's this week, and they're expected to raise interest rates. So the carry trade on the yen, what they call the carry trade on the yen, is kind of expected to unravel, and that was speculated as the cause for that quick uptrend in the yen, and that unravel of the carry trade is kind of expected, so we might see a further upside in the yen. Again, Easy Mike was talking about pairs trade long the yen and short the Nikkei. We'll look at the ETFs to long the yen. We use YCL. Also, we see these big decreases in the Canadian dollar. Again, the Bank of Canada cut rates by a quarter, so they're ahead of the Fed, U.S. Fed. They're cutting already, and we saw that steep decline in the Canadian dollar, New Zealand dollar, Aussie dollar. So again, if you're a Forex trader, pretty steep benefit trend down on those. And we don't directly trade Forex. We do have a number of ETFs in our Google sheet that you can look at trading some of the other foreign currencies if you're interested in that. So I hope that all helps. Easy Mike says Brazil and Guyana have no issues with sugar, so possibly again, now cocoa, a different story. So again, possibly sugar continue to trend down, maybe give us an opportunity there. Okay, let me grab a quick drink and we'll look at our ETFs Google Sheet. So if anybody else in the chat has particular ETFs you want to take a look at, any other commodities, topics, indices, etc. If you throw those up in the chat, we'll take a look at those. Just a quick reminder, as we identify these opportunities and we use our ETFs Google Sheet to identify ETFs that we can use to take advantage of those opportunities, and you can do so as well and get 24/7 access to our ETFs Google Sheet by joining our Patreon at the All Access or VIP level. So let me grab a drink. We'll talk about some additions and then also look at any other ETFs anyone wants to look at. Easy Mike's asking who makes the best coffee and where's the most expensive. In my humble opinion, Jamaican Blue Mountain is probably the best coffee with raw sugar. It's wonderful, wonderful stuff. And a long time ago, it used to be about $25 a pound. It's probably a lot more than that now. I haven't gotten any quite some time, but. So firstly, I've got a couple new additions to our research sheet in our ETFs Google Sheet that I want to share with you. These are both ways that you can trade internet-related stocks. So the first is WEBS. This is the Bear 3X, so it's a leveraged ETF short on internet stocks. This one popped up as a multiple bottom in FinViz on the 25th. So I thought that was interesting. So I took a look at that. So we'll look at the risk reward profile for that in a second in our ETFs Google Sheet. And then I found the inverse of that, the long on internet stocks is the WBL. So if you want a long or short internet related stocks with some leverage, you can look at WBS and WBL. And again, we'll look at the risk reward profile in our research sheet in a second. It was difficult to find the components of these particular ETFs. So I finally found what comprises these ETFs, what they consider internet stocks. And I put that link in the notes. So again, you can use the link in the notes to see what companies they consider internet-related stocks and their weightings in those ETFs. So we can see Amazon, Meta, Alphabet, Netflix, Cisco. So some of these are kind of interesting. Salesforce, Arista, Airbnb. So it's anything kind of related, makes some percentage of their money from the internet. And you can see in the profile and in the ETF database what their methodology is, but it does not list these holdings. So they've got DocuSign, Nutanix, even Marathon Digital, so some Bitcoin related. So pretty diverse collection of internet related stocks and different from some of your other technology related ETFs. So again, if you think this basket, long or short, would be preferable to some of the other technology-related ETFs. Again, you might want to look at WBL for long and WBS for short. So if we go to their risk-reward profiles in our research sheet. You can see right now, WBS, it's a little bit above its 52-week low. Again, breakdown in technology stocks, so WBS has gone up. You can see it's got a pretty nice risk-reward profile, both from a 52-week and top to bottom relationship. Obviously, WBL is the inverse of that, so that's long. So it's a little bit down from its 52-week high. But again, if that bottoms, it's got a pretty nice risk-reward profile. So again, I thought those both were kind of interesting. If you want to trade that alternative basket of internet-related technology stocks, you can long with WBL or short with WBS. So I don't know if anyone in our community has used WBL or WBS to trade internet-related stocks before, but we'd love to hear your feedback. Put it in the comments to this video, in our Discord, etc. So again, you can access the link to the profile, the ETF database via the link in our Google Sheet. And you can see the strategy. It's a vanilla strategy, internet, market cap weighted, etc. But again, the holdings are not listed here. It's got a pretty high expense ratio, so you might not want to hold it too long. Again, you can get more information about those ETFs in the ETF database as well via the link in our research sheet. So again, love to hear anybody's feedback. If you use WBL to long or WBS to short internet-related stocks, and if so, what do you think of those ETFs relative to some of the other technology-related ETFs that we have in our Google Sheet? Quickly go through some of the others people have mentioned. So we talked about like corn and sugar and things like that. Again, corn, the risk-reward profile isn't all that attractive from the corn ETF. So again, maybe trading the futures directly might be preferable. Again, I've looked at this, the copper ETFs. The ETFs are still relatively high. Talked about the FANG stock. So if you're nimble, you can, FANG U long, FANG D short. Talked about the gold. So GDXU long, GDXD short. Again, if you're nimble, there have been some significant moves in those gold ETFs. So good opportunities to make money there. Talked about Japan. So if you wanted to short Japan, EWV. Long EZJ, we talked about those. We'll look at Mexico, MEXX tomorrow again. Talked about PAL, palladium. Also, there's platinum. Again, I haven't had a lot of luck trading that ETF. Silver, again, similarly, AGQ long or ZSL or SSG short. Again, nimble, trading that volatility, make good money. Got the small caps. Here's Kane. So again, you can see the risk reward on that ETF isn't all that exciting right now. So possibly trading the futures might be better. Again, we have plenty of single stock ETFs, quite a few with leverage and opportunities. You can use these ETFs to short single stocks, and you can find them both in our main ETF sheet as well as our research sheet. In bonds, either direction, TMF long or TBT, TMB short. The uranium ETFs aren't really down all that much, but we'll talk about an individual stock. There might be an opportunity to catch that cycle back down, swing back down in uranium tomorrow. Again, along the VIX, we saw POPs, UVXY, XVXY, Again, better if you're nimble and can catch the trend very quickly. Plenty of opportunities there. Talked about wheat. Again, we went long wheat on Friday. Not really all that great of a upside, but about a 40% upside. Again, we've scalped wheat numerous times successfully, profitably using WAT. Again, the yen long YCL with some leverage or FXY. So you think the yen will continue to trend up. YCL if you want short YCS. Okay, let me check the chat, see if anyone else has any other ETFs they mentioned that they want to take a look at. Otherwise, we'll jump into looking at how we can make money trading the July interest rate decisions. Okay, Easy Bike and MD were talking about PAVE. I know I've looked at it. Let me see if I have that in our Google Sheet. Probably be in the research tab. I don't have that one. I have looked at it in the past. So this is a global infrastructure development ETF. So it looks like it's bumping against a multiple right now. So it's pretty high. Let's see what kind of long-term upside. So again, very, very high. Again, I'm sure that was buoyed by the infrastructure bills. It is optionable, pays a very small dividend. Look at the constituents. So United Rentals, Train, Eaton, Emerson, Vulcan Materials. Investment results corresponding to the U.S. Infrastructure Development Index. Industrial transportation, heavy construction. So there's their United Rentals, etc. So again, looks pretty high right now. My humble opinion, a lot of that might depend on what happens with the political scene. Are those infrastructure investments going to continue? If so, it could trend back up. Or if those are going to be cut, then we could see, some significant downside in PAVE. But again, great performer for the year. So it's been up 22% for the year. So if you did catch that, back in 22 or so, nice trend upside there. So yeah, thank you for sharing that. Again, I had looked at that before and didn't see a whole lot of future upside at this point. But again, if you can catch those dips and bounces more nimbly, you can make some good money there as well. So I hope that helps. Ethereum ETFs, kind of waiting to see how they develop, what all gets approved. Again, they're all very new, so we'll take a look at those in the near future again as well. So let's talk about how to make money trading the July federal interest rate decision. So we'll look at the Fed rate monitoring tool and the CME Fed watch tool, see what the probabilities of a Fed rate cut in July, September, etc. going forward might be. Just a quick reminder, you can find links to these tools in the notes Also, we've got videos on how to use these tools to see the probability of various Fed interest rate decisions. So you can listen to those videos via the links in our notes and also find them on our channel. And you can find these links to these tools also in the links section on our homepage, beachbumtrading.com, bum without the U. So again, the CME watch tool, Fed rate monitor tool. You can always find links to these tools on the links section of our homepage. Again, beachbumtrading.com, bum without the U. Also, after we look at the probabilities, I had a question in the Discord recently about, okay, how do we prepare for the potential of a Fed rate cut? How do we position ourselves to make money trading when the Fed cuts rates? And we've previously discussed this earlier this year, and we have several videos, and you can access the bonus links to these videos of our previous discussions on how to make money when the Fed starts cutting rates via the links to our videos in the notes. So if we look at the Fed rate monitor tool first, see we get a countdown clock of when the Fed interest rate decision is, and we can see what the probability is for a change. So very high percentage chance of no change. So not almost 94% of no change, no cuts, no raises in July. That would be my expectation. In my humble opinion, I don't expect them to make any changes in July. There is, again, we'll talk about some strategies of how to play that. September, got a very small percent chance, 11% chance of a cut, but still the vast majority says no cut September. So there was, speculation of a September cut, but right now the probability, given all the economic data, etc., says no cut in September. Also, you've got the political considerations, even though, again, the Fed says they're not going to be political, not consider politics. I think they'll probably shy away from making any change unless there's a significant change in the economic data in September. Once we get to November, probability is for a 25 basis point cut, 60%, only 30% chance of no cut. So right now the expectation is the first cut would be in November. December, they're saying there's some probability of a further cut. So right now these probabilities are saying a second cut in December. So we'll see if that's the case. So again, right now all the probabilities say Fed's not going to make any changes in July, and they're not going to make any changes in September. So let's look at the CME Fed Watch tool as well, see if that agrees. And you can see the countdown clock, and we can see July, 94% chance, no cut. Again, September, 88%, no cut. Only 11% for a 25 basis point cut. Again, once we get to November, they're saying one cut, 60% chance, 30% chance, no cut. And December, we've got two cuts, 56%, 57% chance for two cuts, 34% chance for only one cut. So again, both the Fed Watch Monitor tool and the CME Fed Watch tool right now are giving us probabilities that the first cut wouldn't be till November, and they're saying a second cut potentially in December. So how do we make money trading around these cuts, around these probabilities? Again, you can hear our previous discussions on how to make money when they start cutting. I'm sure people are already positioning. Well, they've actually repositioned for the cuts. Saw the IWM going up, the Russell going way up, and the speculation that we'd get a cut soon. If we do not get a cut, I think we'll see a negative reaction in those sectors where people have been speculating on a nearer term interest rate cut. And again, you're hearing quite a few people say they think there's going to be a September cut, but the probabilities are saying we're not going to get a cut in September. So both this week's interest rate decision and the September one could be pretty disappointing, and you could see an unwind in that run-up that we've seen in the IWM and the small caps, etc., utilities, real estate, all those sectors that benefit from an interest rate cut. Again, if it doesn't seem likely that we're going to get it sooner, those sectors, again, may see a correction. And the sectors that are not as sensitive to interest rate cuts, which is kind of the mega cap techs, some of the other tech companies, might see a rebound based on, again, the lower probability that the Fed's going to cut. So again, those are different ways you can play the July Fed interest rate decision. Again, we don't expect them to actually cut in July, but I think people will be closely listening to what Powell says. When do they expect to cut? I expect, again, my humble opinion, he's going to continue to say they need more data. They want to see inflation coming down reliably to their 2% target. Again, there just isn't any economic data that says they need to be in a rush to cut. Employment's fine, GDP's positive, and inflation's still too high. So again, what do you all think? Do you have other ideas on how to make money trading based on the July Fed interest rate decision, when the Fed starts cutting, etc.? So please put it in the comments below. Join us in the Discord. We can continue to have this discussion further in the Discord. Again, I believe Gerald asked this question recently in the Discord, so I also replied with the links to our previous discussions here in the Beach Party channel in our Discord. And again, you can also find links to those previous videos, previous discussions on how to make money when the Fed starts cutting rates, also in our Discord. Wrapping up July, heading into August, but you can hear our discussions on how to make money trading in July. Also, the summer in general. We're heading into August again, so next week probably we'll talk about how to make money trading in August. We'll look at how August tends to perform. Again, we've talked about that in our discussions on the summer. Again, we're seeing this sector rotation out of technology into defensive stocks. And again, based on the Fed interest rate decision, we may see a significant sector rotation back. If the likelihood, as we saw, the likelihood's pretty low of a Fed interest rate cut prior to November, based on the Fed Watch tool and the CME, the Fed rate monitoring tool and the CME Watch tool. So again, love to hear y'all's feedback. What do you think? Please let us know in the comments, in our Discord, etc. If you have any other questions, comments, feedback on what we can do to continue to improve our weekly trading game plans, any of our videos, tools, etc., our community, we'd love to hear your feedback. We need your feedback to continue to improve, to add more value for all of our fellow BeachBum traders. We hope you like this content. Please smash the like button. Help us try to get the YouTube algorithm to someday show us some love and share our content with more traders around the world. And we really need your help to directly share our content with your fellow traders. Invite them to join us in the live chats for our live streams. Join us in the Discord. Again, we can continue to have these discussions 24/7 in our Discord. Our Discord's free to join. Love to have you join and participate in our Discord. So thank you to everyone that participated in the chat today. We hope you'll all come back tomorrow for part 2 of our weekly trading game plan for July 29th through August 2nd, where we'll take all of this data, the probabilities for the July federal interest rate decision, etc. And we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and option strategies to generate income while we wait for our top swing trading stocks to set up. So again, hope to see you back 10 a.m. on Sundays for part 2 of our weekly trading game plan for this week. So thank you again for participating and for watching, and have a great day.